Hello and welcome to TDJ Equities webinar that is set up for giving power to the business owners. This is our webinar that we do with you guys throughout the next few months. And what we're going to give you is some information that will help you understand it more when it comes to funding. Hi, my name is Jacqueline Jackson and I'll be your host. Today we're having a special guest, which is an insurance agent that is actually giving us some information on getting property and how insurance actually plays a part of that. His name is Harrison Hess, and he's with Go Goosehead Insurance. And so at this time, we want to turn it over to him so that he can give us a little information about him going forward. Thank you for coming, Harrison. We're glad you're here. And if you would, introduce yourself and tell us a little bit about yourself.
Hi, thank you so much. Yeah, so like she said, my name's Harrison Hess. I'm glad to be here talking to you guys. So like she said, I work at a company called Goosehead Insurance. We're the largest independent broker in the nation. I work specifically with personal lines insurance, and moreover, my clients are focused on real estate investment and development. So what I'll be talking about today is just kind of going over some crucial things that most investors or developers really need to know when getting their properties covered. I know insurance is kind of a topic that nobody really wants to talk about or talks about a whole lot, so there's a lot of gray area. And I hope that going over this webinar today, we can really cover a lot of the things that most people need to know and don't know.
Okay, great. So this is something that sounds like it's going to be very informative. So let's start off asking what our first questions that we have. We have the first question is, how do we deal with the policies that's different in the coverage, different coverages for as the rental property and then the owner occupied property?
Yeah, of course. So there's going to be differences whether it's going to be a homeowner's policy or a dwelling policy, which is going to be more along the lines of somebody who's in real estate investment and has those in their portfolio. So
Okay.
a dwelling policy is going to be used for a home that's in your portfolio that you're currently renting out to somebody that is not, you're not living in it yourself. So ways that these kind of differ from homeowners are going to be your different coverage levels. So just going based off that for your dwelling policies, there's going to be different levels of dwelling policies that you have, based on the comprehensive coverage that they'll allow. There's going to be a DP1, a DP2, and a DP3
Right. And I
policy.
think we had talked about this earlier, is actually different levels. Let me say this part so everybody can understand. Maybe you've heard these terms of non-owner occupied and then owner occupied. Owner occupied is like the house you live in, you live there.
Absolutely. Yes.
Non-owner occupied is like he said, when you rent it out, but also if your business is renting it, is paying for it. That's not where you physically live, it's your business,
Okay.
even though it's yours. That's still considered, as a way of commercial, basically, because non-owner occupied and occupied in a commercial building is considered commercial insurance, right? Both of those require commercial insurance and not the owner occupied insurance, to make sure you all understand that. So now
Yeah.
you're going to break down the different levels of those insurance.
Yeah, and for dwelling policies, so if you're a real estate investor that owns a portfolio of different properties, your dwelling policy that you don't live in, that you're renting out to a single family, or if you have a four-family quadplex or something like that, that won't necessarily require a commercial lines. That can be a personal lines, and you can add comprehensive coverage to that as well. If say you're filing under an LLC or you have that in your business portfolio, then you could add the commercial policy as
Let
well.
me ask you a question. I'm sorry, Harrison, to make sure I understand. Now you're saying dwelling policy. A dwelling policy is not the home, not the house I live in.
No, ma'am. That would be a
What is that
homeowner's
called?
policy.
That's called
That's a
homeowner
homeowner's.
policy. And
Yes,
then when
ma'am.
you dealing with a rent policy or rental or non-owner, call it dwelling
A
policy.
dwelling policy. Yes, ma'am.
Thank you. I
Or if
got
you're
you.
a developer, even if you're a developer, we have vacant home policies. So that's if nobody's living in it. Say you just built a home. I have a developer that I work with now that just built 4 homes that I've insured. And what that form is on, that's going to be a vacant dwelling policy. So nobody lives in it yet, but he
Right.
built it and he wants it covered. Same thing for if you're building a property and it's under construction currently, then you would have a builder's risk policy, which will cover it from vandalism, theft, things of that nature
Okay.
that can occur while it's either vacant that was just built or still under construction.
Okay, so let's go back to this vacant policy. So you're saying on the vacant policy, again, we talk about non-owner occupied, right?
Mhm.
And that's when I need to get that policy when I have what a tenant in there, and then they moved out and now it's vacant, or when should I get a vacant policy?
Yeah, perfect. So you got it pretty much right. Anytime that you have a property in your portfolio, or maybe you're a developer and you just built one and
Mhm.
nobody's living in it at the moment, there's going to be a different coverage than if you were to have tenants. That would be a dwelling policy.
At
And if
that
you
point,
don't have any
okay.
tenants, then it's going to be vacant because there's nobody living in it. And there's different coverages and different requirements for those insurances that sitting down and talking with a professional like me, we can go through and get you lined up with the right one.
Right. So, and then you mentioned that we need builder's policy is when we were actually doing what, the rehab on the job?
Yeah.
I'm talking about non-owner now, right?
Right,
Yeah.
of course, and it's still along the lines of whether it's a portfolio or a new building. Basically, if it's under construction, if you're renovating it, so if you do a lot of fix and flips and you're renovating the property, excuse me, and nobody's living in it at the moment and it's under construction, you're gonna have that builder's risk policy.
The builder's risk policy. Okay.
Yes.
So now let's talk about the difference between, because you and I have actually had this conversation before. So I was kind of stunned then, and we kind of talked about in the office that there are so many different degrees of insurance policies. I
Yeah.
definitely want you to explain that DP1, 2, and 3 policy, if you could explain that to us.
Absolutely, absolutely, yeah, and this is pretty crucial too. So DP will stand for dwelling policy, like we talked about earlier, and there's three different levels, just the same as a homeowner's policy. So the different forms we'll write on for a homeowner's, which is the one you live in, is an HO1, HO2, HO3. For dwelling policies, follows the same guideline, except it's a DP1, DP2, DP3, respectively for for dwelling policy. Sorry. Um, so a DP1 is going to be on a named perils basis. So it's going to be for specific losses. So it's going to be the least comprehensive coverage. And a DP3, on the other hand, is going to be your most comprehensive coverage because it's going to be an open peril policy. So it covers all perils unless exclusively stated otherwise. So there has to be named exclusions, otherwise it's an accepted peril. So an example of this that I actually just had this week, which is kind of funny. We had a client that was filing a claim, and what had happened was there was a kitten that had lived in their attic and had 6 babies, and they clawed through the roof and left a hole in the roof and the ceiling.
Okay.
So they have an HO3 policy which would cover that peril because kittens are not stated as an exclusion on their policy. So an HO3 would cover that,
Cover that.
whereas, or sorry, not an HO3, a DP3 would cover that.
Right.
That's the most comprehensive. A
Because
DP1 would
that's why
not
you
cover.
say it's open. Wow, I didn't know that. So it's open because you have more, like I said, a higher coverage of things compared to,
Yeah,
I guess you said in DP1. If I had that, it wouldn't cover the damage with the cat. Is that what you say?
no, ma'am, because
Oh,
DP1 is going to be basic named perils. So like wind, fire, things like that, like the basic ones, flood damage, or not flood damage, water damage, things of that nature are going to be just the named covered perils.
so let me ask you this. So is it important to really, I guess we need to read our policies to know what type we have, or what do we do? Ask for that? Because we only learn this
Yeah,
terminology because of you. So
right,
that's what I'm
exactly.
saying. So what do we say when we want to say, okay, I want to have, because what do we say? Do I need to have the least policy, the best policy? What do we do? And then what do
Yeah.
we see what we actually getting so we'll know that's what we got.
Yeah, so when say you're working with me, we write on DP3s and HO3s mostly. We go with the most comprehensive approach just off the bat, and that's what I do with my
Right.
business. But say you're not working with someone like me, what you're going to want to ask from your agent is you're going to want to know the perils on your policy. A copy of your declarations page or your application will show you all your coverages on it. You want to make sure you check which form it is. So if they're writing on a DP1, that's going to be the named perils form. That's going to be the least comprehensive. A DP2 is just a little more comprehensive, and then the DP3 is going to be your most. So asking which form they're writing on, builder's risk and vacant properties, those typically are one policy form that they'll write, so they're not necessarily in order of the DP1, DP2, DP3.
Right, right. So that's how they go. Okay, well,
Yeah,
let me, and I think, see, that's what I'm saying. That is good. That's great information. What I want to say now, let's talk about when we have, okay, this is what we get a lot. As loan brokers, we deal with getting money for real estate investors, right?
of course.
Sometimes real estate investors, as we say, non-owner occupied, are not actually in it for the business. They were more like forced into landlordship. Okay.
Hmm.
So the understanding that some people have, and I want you to correct us and let us know the right way, is that I was living in the house and I moved out and I never changed my insurance. It was a homeowner policy. So
Right.
explain to us, how does the coverage cover a loss for us if I did as a rental income compared to if I did it as if I lived there? How does that work? What's going on with that?
Yeah, so if you're not living in the home and you have a homeowner's policy or an owned dwelling policy where the owner is occupying it, and you move out and you're not actually living there and you have tenants in there, there's a lot of coverages that your insurance company, if they find that out, they just won't cover you.
Right.
They'll cancel your policy even if they decide that that's not the risk they want to take on because that's not the policy that they sold you. And it's
Right.
well worth it, especially so talking to investors specifically, or people that end up renting out their house. Um, Even if it's in a situation to where they're forced to do it, you still want that rent money that you're getting paid. Um, Say there's a loss that happens and part of the house burns down, or there's a flood and you can't have your tenants living there at the
Mhm.
moment, even though it's still a homeowner's policy. Um, if you're not living there anyways and your tenants can't live there and pay you that rent, then you're not covered for loss of rents on
Right.
a homeowner's policy. To whereas if you have a non-occupied dwelling policy and you have coverage for loss of rents, in the event of a loss and your tenants can't live there and pay rent to you, you're still covered for that loss of income that you'd get from if they were still living there and renting it.
In there. So basically what you're saying, and I think people don't realize, the insurance is there to protect you in case you have a disaster, right? You know,
Yes.
calamities. But if you move out and you don't change that insurance to commercial, is what we call it, commercial
Right.
insurance, which,
Yeah,
then what happens is, like he's saying, that you won't be able to make those claims on it. And a lender doesn't want to deal with property that's not adequately protected.
of
Okay.
course.
So
Absolutely.
even if you did not know, and ignorance is not any excuse of the law. That's the problem with everything. You still gonna have to deal with. They're not gonna do a claim on it because you've had a renter in there, and that's the case. So the thing is, we don't know how each insurance may do it, but that's pretty much the law on both of them, all of them. But we need to learn more about what type of policy we have, along with what situation we have, because we need to change
Yeah.
that accordingly, right?
Absolutely, yeah, and it's all about, it seems like a headache to go and switch possibly your insurance or go through this or go through that, but I promise you the headache from dealing with a loss that won't be covered because you have the wrong insurance is much greater than anything you'll have to go through in switching it.
Okay, and I agree. That's definitely something we did. So I want to go through and ask you a few more questions.
Okay.
One I wanted to ask you that we had was that, are there specific endorsements or add-ons that can be particularly beneficial for protecting real estate investment properties?
Yeah, of course. So just a few of the endorsements that you could add on to
Okay.
an investment property or the dwelling policy that you have. Um, Just some of the common ones are gonna be like what we just talked about earlier, the loss of rental income coverage.
Okay.
So, in most cases, real estate investors have rental properties and they're making their, passive income on people renting it out. And in the event of a loss, you want your insurance to cover that income that is coming to you.
But you're telling us that if that's something we need to get added to our policy for sure, right? To make sure, say that you want
Yeah.
that rental, that vacant.
Absolutely,
Okay.
absolutely. That's a really easy thing for me on my end to check to make sure that that's on there. My developer that I just work with now, I went through with his lenders and checked all of it because sometimes through different companies they could be named different things, but that's
Right.
where working with someone like me comes in because I'll know what's what to make sure you're covered for that. So going through and making sure that's covered is really easy for us to do here, and it really helps out a lot. I mean, that's going to be one of the main coverages that you're going to want for your property for sure if you're renting it out. Some other ones include landlord liability coverages. So if something happens to a renter while they're there and you're held liable for something, the landlord is held liable. You'll have um, protection as far as, you know, tenant injuries, property damage, things like that. There's also ordinance or law coverages. So this would be like additional costs of rebuilding or repairing property to uphold current building codes or ordinances within the city that have changed possibly since you last built or since you've acquired the property. And then sewer drain and backup and equipment breakdown. So those respectively, those are endorsements that can add either sewer backup. So if there's a buildup of water and it causes
Right.
water damage, or say your
Oh.
HVAC system breaks down, you'll have coverage for that and the repairs as well with those endorsements.
Right. And see, it's no way we could remember all those endorsements. So, like you said, it's important if we reach out to you because you know what it, and I guess once you find out what we're trying to do, are you trying to do the insurance for to live in the house or are you gonna rent it out? Then you can actually go through and pretty much guide them on everything they need to have. And I think
Absolutely.
that's what I say. That's why I wanted to bring you on because Harrison, so you all will know, he works for Goosehead, but he works with real estate investors a lot, the developers and everything. So he's a great go-to guy when you're trying to get your insurance for your properties. He can handle any type of deals you have. Just bring them to him. I think that's great. That's why we wanted to have you here because we talk to people about the insurance at the time we need it at the loan. You know what I'm
Right.
saying? Which sometimes is, I've called you and it's incorrect and
Mhm.
which takes a lot of time away from the process. So
Absolutely.
coming to you, and that's why I'm glad you was willing to come on so people can understand. Insurance is going to be a problem if it's a problem. So,
Mhm.
so
Absolutely.
everybody needs to try to take care of it. And if they don't know what to do, especially if they start now, or even if you've been doing rental for a while, I think you're a great person for them to reach out to. We correct? Okay, so
Absolutely. Yes,
okay,
ma'am. I really appreciate you having me on and everything. And that, yeah, that is the goal. I mean, there's just, even just from working in the industry, there's a lot that I didn't know when I started and a lot that I've learned over time that I know a lot of my clients, I'll be talking to them and they'll say, "Oh, I didn't know this or I didn't know that." And it's good to have, someone like me in your corner helping you
right,
out. And like you said, insurance isn't a problem until it becomes a problem. And
right.
nowadays with the market, um, just the way premiums are now and underwriting and things of that nature, I write in all 50 states.
Mm-hmm.
Me or my team writes in all 50 states, and Texas, especially, Florida, California, obviously those places, the insurance market has been getting hectic and very confusing. So for a loan officer or a real estate agent or even just an investor to try and figure it out, it's beginning to become very muddied waters. And what I've been able to do is really help guide my clients through the muddy waters that is the insurance market now.
Right.
So
And
it's been nice to be able to help out and be a resource for
right,
sure.
and what he's saying is so true with the market because even with us, things are changing. We keeping up with everything, and that's what we do every day. Imagine you who don't do it, how much stuff changes from week to week to month to month. So it's good to
Absolutely.
have a team together that can help you get the information you need so you can make intelligent choices when it comes to your business. And I think having someone like Harrison on your team on the insurance, and of course us because we're the money person,
Of
but
course.
definitely having someone like him that has, the knowledge, the experience, and that he can tell you what way it will work and which way wouldn't, because he knows we need that. We need that. So that is awesome that you can provide. So Harrison has his email that's up there at Harrison has at goosehead.com, but his number's there too. 214-453-1764. Guys, please reach out to him. Stay tuned to us WWTDJ Equity LLC. Sign up for our email so that we can send you notices when we have webinars like this and other things that are coming up. We want you to be a part. Harrison, we thank you for being our first guy, and we love what you had to say. Thank you, thank you, thank you. And if you have anything you want to say to the audience before we get off.
Yeah, well, first, I just want to say thank you very much for having me. I've enjoyed it. It's been so great getting to just spread knowledge in an area that, is very important, especially for the people watching. And then for the audience, I just want to say, thank you for your time. Feel free to reach out to me at any time. I'm open whenever you guys want to talk. I'm ready to build some of these relationships between you guys and really, guide you through the muddy waters that is the market nowadays. And we'll both help you out as a team and get you where you want to be.
All right. Thank you. Thank you. All right. And to the rest of you all, again, thank you for attending. Looking forward to seeing you next time. Until then, you all take care.